All right, let's get some insights on the news that's shaping the markets. And for that, we welcome in Chris Vermeulen, founder and chief investment officer of the Technical Traders. Chris, thanks so much for joining the show.
Thanks for having me, Carolyn. Pleasure.
So, Chris, different vibe so far this week than last week. Stocks attempting to rebound, having a really good day today. What's your take on today's market action?
Yeah, well, last week, for example, we obviously had some more tariff news with the European Union, and it sent stocks tumbling. Last Wednesday, we saw a massive flood of panic selling on the New York Stock Exchange, which is something I keep a very close eye on. Are shares being sold on the bid or bought on the ask? And the New York Stock Exchange is a very good warning sign of what is to happen. And so last Wednesday, we saw a big flood of selling Wednesday and Thursday. It hit a level about 10 to 1 on this ratio of selling versus buying. Whenever we have this ratio and it closes above 8, and it closed on 10 for 10 on Wednesday, that usually signals that in the next 1 to 3 days, the market should have a washout low, and then we start to see a big rally going forward. And so all that has been unfolding. We saw further selling on Thursday last week. The market, we had some positive news over the weekend, and now stocks are popping and rallying. So people went from very fearful last week, dumping shares short term, and now they're buying shares hand over fist. In fact, today we have, based on that same indicator, we have FOMO. People don't care what price they're paying. They're piling into the New York Stock Exchange stocks and just buying shares hand over fist. So this is a very good sign. This is a broad market rally, as you just mentioned there. Pretty much all sectors are up in the S&P 500. The Magnificent Seven are leading the way higher, and there's a lot of money flowing in here. So I think this is going to be a very significant push higher for the next several days. And this week, I think, is going to be very positive for stocks.
So a push higher for the next several days. You talked about that washout low. Do you think the bottom is in at this point?
I don't. When I look forward 6, 8, 12 months from now, I'm actually very bearish. I actually feel more so that a recession is actually going to be coming. But as a short-term trader, we're long the markets, and you don't want to fight the trend. This market may want to push to some new all-time highs potentially. So you have to definitely follow price, not what you think or feel, but follow what the price is doing and manage positions. So I'm bullish short-term, but look 12 months from now, I think we actually could be a lot lower than where we are right now.
Into the longer term outlook right now, just in terms of your bearishness, what is the reason for your pessimism in the longer term?
Yeah, there's a lot of things that come into play. So I'm a technical analyst, so I don't really care too much about the news, the headlines, economic data, fundamental data. I look at what price is doing, and price tells us what people are doing with their money. And we have been seeing gold outperform the markets and lead the way for really the past 6, 8, 12 months. It's been doing very well. And when we see gold outperform the way it has, which is almost identical to what we saw in 2008, it usually means the world is preparing. They're getting out of the financial system, putting their money into physical gold. They're worried about bankruptcies. They're worried about an economic slowdown, wars, all of that stuff. And so that is one of the warning signs that is happening. We're seeing, today's a broad market rally, but in general, majority of stocks are nowhere near the highs. The past year has been Magnificent Seven driven. Most people's portfolios aren't doing very well. And this to me is really just a complacency rally. People are moving in, the market's drifting higher, carried by the big techs. But overall, there's not a whole lot of strength. To me, the economic data is slowly weakening. Real estate is about to have another leg down and really hit people in the pocketbooks. Not only if stocks start to roll over, but when they see their real estate go down, that creates a lot more panic. And people are first to sell their stocks when they get nervous, then their homes. So there's a lot of pieces that come together. All markets are related. If money's moving out of one sector, it's moving into another asset class. And we're seeing that in the gold space. Money has been coming out of gold just the last month. It's been flowing into the stock market. But I do think that is going to turn around. I think gold will have another leg higher here. And I think the equities market will roll over. And that's money has been flowing to gold as a defensive play when they get nervous.
Okay, so tell me, would you buy this 2% dip in gold that we're seeing? I had mentioned the percentage off the highs. It's actually about 6% off the highs right now. Would you buy that dip, or would you invest in Bitcoin, which recently just had new highs?
Yeah, to be honest, I think I would actually invest in Bitcoin. Bitcoin has got a very strong chart pattern. Now, don't get me wrong. Gold is in a bull market. It's still trending higher. It is pointing to potentially $3,750 per share. So there is upside potential. But Bitcoin, when you look at the monthly chart, it has a very similar pattern that it did earlier or late last year, early this year. And there's about a 25, 35% move in Bitcoin. I think Bitcoin could rally to about $135,000 per Bitcoin really in the next month. The chart is primed and ready. We're long Bitcoin, and it is ready to have a big pop and move. So I like Bitcoin. If you're going for the best bang for your buck, that is kind of the one that is ready to pop and rip higher. And it is the crowded play. Bitcoin gets headline attention all the time. Kids, can trade it. The whole world can trade it from the palm of their hands. It's not like a stock or something. So it definitely, when it starts to move and people have FOMO, like they're missing out on the next Bitcoin move, it just sends Bitcoin shooting higher. And I think that's going to be what happens again here.
Okay, 135,000 over the next month. We will see. Chris Vermeulen, the technical traders. Thanks so much.